Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. It's April 11th. Boy, we're in the thick of it when it comes to the sort of unexpectedly broad and deep tariffs that have been imposed by the Trump administration. But we had some news this week on Wednesday where President Trump paused a number of the tariffs. And so that provided, at least for that day, some relief in the market, some positive returns. We gave some of that back on Thursday. But, basically what we want to get into is essentially, he left a number of tariffs in place. Of course, we're going to watch those 90 days for negotiation and where things might go. But one of the main sort of points of friction, of course, is with China. He's left massive tariffs in place with China. China's retaliating. And so that's in some ways kind of coming to a head rather quickly. And so anyway, in this episode, I want to get into a little bit really what's behind that U.S.-China competition. And so let's kind of jump into some of the details. So first, as it relates to the pause, basically, as I mentioned, China essentially were not only left unchanged, but raised to 125% in terms of the tariff rate. Now, other tariffs that weren't paused include the 10% baseline tariff, those on steel, aluminum, auto imports, and those in place with Canada and Mexico. But generally, again, there was relief on Wednesday. The S&P 500, for example, that day gained 9.5%. NASDAQ was up over 12%. And to give you a sense for the S&P gain, that represented a gain back that day of 69% of the decline that we'd seen since quote-unquote Liberation Day. But then, I think importantly, 42% of the decline seen since the market high in February. And I'll get into sort of the trigger of market action back then here in just a quick second. Now, importantly, also, of course, we should expect volatility. And then on Thursday, markets gave back some of those gains, right? So again, we're in a heightened volatility environment, really anchored in the uncertainty, the unknown of where things are headed when it comes to the global order and global trade. Now, as it relates to the markets anyway, I mentioned February being the peak, in this case of the S&P 500. And it's interesting to note that peak occurred on February 19th. So just before that, we learned of China's DeepSeek AI. And, essentially it was sort of a shock in the sense that that there was a recognition that China was certainly active in that space, but also some evidence that they were able to get the models built at a lower cost. And so that sort of shook companies like NVIDIA and, but also I think brought into focus U.S.-China competition. Now, as an example, the United States Trade Representative basically was holding public hearings that day to review and identify sort of trade barriers and also a focus on intellectual property. And so, that certainly includes sort of a focus on AI, how AI is getting done, and at some level, whether the U.S. is being mistreated as it relates to that. And again, trade has been in focus. It's been in particular focus since February 19th, a focus on things like AI, DeepSeek, intellectual property. And so in some ways, it shouldn't have been a surprise that these actions have been taken. Now, again, they were broader and deeper than we might have anticipated. In any event, in our Outlook report, recall that we published an article called Crossroads: Four Ways Forward, which dives deep into U.S.-China competition. We know that the U.S. and China, we've been competing with China for decades around economic global leadership. And essentially that's affecting how they engage with other countries, how we engage with other countries, how we engage with them. And it's all about, in some ways, who's dominating, right? And so in that article anyway, we got into four scenarios, sort of both countries do well, both countries do poorly, or one beats the other. And in that framework, we identified 4 driving forces. So it was innovation, domestic policy, foreign policy, and importantly, global trade. And so all those things, but especially trade, will be critical in determining each of our country's futures. So, what we see then is, as it relates to the way we sort of talked about it in the article, is that in some ways, how people develop these trade relations and the agreements that get put in place, including whatever tariffs and other things might be there, that's sort of a bargaining chip when it comes to how to engage with different countries. And essentially, this has been obviously a super big move. So, for example, since joining the World Trade Organization, WTO, in 2001, China has worked, and it's become the world's largest exporters. So we basically get into that in the article. And of course, all of that means, in some ways, the U.S., through that competition and maybe policy and mistreatment, has been disadvantaged. And so this is a big, aggressive move, obviously, to go in the other direction. We and other countries are focused on supply chain vulnerabilities. We're focused on unfair trade practices, as I mentioned, intellectual property, as I mentioned, and all of that continues to influence how we're engaging with various countries, including China. Now, remember, as another example, that China, in its hard work to build relationships, has done things like its Belt and Road Initiative, literally going around the world and building infrastructure. And so, at the end of the day, what's happening here is the U.S., the administration, really trying to make a move towards an aggressive shift. I thought it was great news, of course, to see a pause, in the sense that there's, it's great to have a pause, but what's more important is a signal of a desire to negotiate, right? And so what we would expect to see over the coming 90 days is the administration facing off with different countries and trying to strike a deal that better advantages the U.S. The big sort of elephant in the room, the big issue, though, is, okay, at what point and how quickly do we get to the table with China and start negotiations on what would be a reset in some of these arrangements that would be sufficiently satisfactory to the Trump administration. And that is a big uncertainty. It's a big unknown. And so that's one of the things that we're going to be focused on. In any event, hey, that's what we wanted to cover this week. There's a lot going on. We'll continue to work hard to make sense of it and come back each week with an update in this form. But we really do appreciate you taking the time to listen, and we'll catch you on the next episode. Thank you.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.